Hi, today I'm going to be telling you the difference between trading and investing. This is something that I feel like not a lot of people understand. It is something that could literally change the way you view the markets as a whole, right? And I'm going to be using an example based on your favorite investing scheme, I think, Bitcoin. And I'm also going to be using another example based on Bitcoin on trading, right? So, number one, when you're looking at trading, first of all, it's focused on price, right? That's number one. It's focused on price, meaning as a trader, you're focused on buying something at 1 rand and selling it at 1 rand 50, right? And then when we're talking about investing, we're focusing on the value, which means if I see this pen, for example, if you're seeing a pen and you're like, this pen is the value, the importance of this pen will increase, as which means the value will increase, the importance will increase, the value will increase, right? So you're investing in it. That is what you're investing in. You're investing in value. So you're when you're looking at investing in something, you're not necessarily looking at its price, you're always looking at its value, right? So when you're looking at trading, we can also focus on buying and selling. You can make money off the buying and selling, right? So when the market goes to up, when you see that the price of this is $2.50, and you understand that $2.50 is simply too high for that something, it might go down and you can make money going down too, right? So, but with investing on the other side, you can't invest downwards. You can't invest that the market will go down. You can short the stock, you can short it, but that is not investing. You're literally trading it back, or that's essentially what you're doing, right? And also when it comes to trading, when this is something that I feel like we don't take seriously, right? With trading, time doesn't matter, meaning there are traders who can scout the markets and grow their accounts until infinity, right? But with investing, it's usually long term, meaning you buy something now, you hold it for a couple of years or whatever the case is, and then you sell it, or it's just, right? Investing also applies in businesses. You can apply trading in businesses, but it's a lot more, it's a lot harder than like thinking about it. It's like, yeah, I'll buy a car for 500,000 and sell it for 1 million. It doesn't look like that. The risk rewards are very complex, and it's a bit complicated. It's something that I'm willing to see, but I'm not willing to dive as deep as I did before, because I tried trading with big things, and it didn't work out the way I thought it would work out, right? And then the risk meter for trading is 90%, simply because 90% of traders lose their money, right? And the risk meter for investing is slightly 0.01% less than trading. The reason for that is because you're only looking for buyers. So if you're only looking for buyers, that means only the people who aren't expertise on holding or expertise on understanding what they're investing into will let go, and that is part of the 90%, right? But the one because it's only one direction, you are more likely to hold the trade, right? So I'm gonna move on to the chart right now so that you can see investing and trading in practicality, right? So we're gonna use Bitcoin, right? So as a trader, what do? You buy Bitcoin here, you sell it here. Hypothetically speaking, you sell it right there, right? So how many pips is this? According to this broker, right? So this is roughly around, that's a big number. That's around 1,000,000 points. 1,000,000 points. That's intense. 1,000,000 points. Oh, Bitcoin is heat. So it's something you see often, but as a trader, I'm used to like 1,000 points, man. 1,000,000 pips. 1,000,000 pops. That's 100,000 pips. 100,000 pips in like a day. No, man, that's insane. But on a serious note, this is what you're gonna see. This is what you see on Bitcoin, right? So that's what you're a trader. That's what you're doing, right? But as an investor, you buy the whole thing. You're more focused on the value of the whole thing. So you bought at 34,000 and you sold at 45,000, so you make 10 grand. Where else as a trader, 10 grand is standard. As a trader, you took the trade, maybe you risked maybe 1 to 10, let's just say you risk this amount with the same amount of money, right? So how much is that how many pips is this? Let me just calculate quickly. So how many pips is this? this is roughly around 100 points, 100k points, 100,000 points. So it's a 1 to 10 risk to reward ratio, right? So if you made 10 grand off this process as an investor, the trader made 350 grand. Wait, no, I'm wrong. The trader made 100 grand. It's 10 times what the investor would have made, right? This is simply it, right? But here's the thing: if this stock came down here, the trader would have lost 10 grand and the investor would have lost around about 2. So it's kind of complex to understand what is happening, right? So this is what I'm saying when I say that trading and investing is not the same thing. It might seem as if the same thing. When you're looking at the forex guys, you are like, these guys, no, the investors are not Twitter. No, we're not investors. As traders, yes, we do have investments running, yes, we do have this, but we do not like, emphasis on the do not. We do not do the same thing, right? For example, a trader might have bought here, right? And as soon as the market touched here, sold, and then the market touched here, bought again, the market touched here, sold, bought, just like until all the way to 10 million, trillion, whatever the case may be, because that's what traders do. The traders have the option to sell, right? But as a buyer, you'd have bought and literally held, although it's a lot of money. Like, it's a lot of money, but it's simply the truth. It's simply, in all honesty, that is what is happening, right? So an investor would have bought somewhere around here and then kept on holding, right? I remember when I bought Bitcoin, I bought it at 20. I want to find that exact entry. Does that 20? Yeah. It was a new high. It was a record-breaking high. And I was asking myself, why did I enter? And I was like, if it went to 15, I'm taking my loss. It's fine. But thank good, like, with everything went well. So yeah. So if it comes back to around 20, hey, I'm in trouble. But yeah, it is what it is. So that's what is happening with trading and investing. You're investing in the whole project. Price, you're always focused. Trading, you're always focused on the price. You're like, okay, at 20k, it entered at 20k, if it touches 15k, the same as how I approach the market, the Bitcoin market. I was like, if it touched 15k, I'm out, right? But as an investor, you bought, and most likely you're gonna hold it until it dies, until it hits zero. You're gonna hold it. It's that mentality. With trading, you are always focused. Your mind never sleeps. Your mind never, you're always, we like to say we're letting our money work for us, but what is in actual honesty, we are working now so that the money, as it works, we can, because it's simple. You just place a trade and then you place a stop loss, you place a take profit, you leave. That is essentially what it is. That could build a profitable trader. But now if you're like me, or you're like someone who wants the whole cake, you don't just want the piece, you want the whole cake, it comes now a problem on yourself, because you're allowing it to affect your mind. And once it affects your mind to a certain point, I feel like there's no return. That is why breaks are necessary. That is why you need to find an outlet. That is why it's not good for your mental health. It's not good for anything, right? This is a bloodbath. For only in traders. For investors, investors, maybe beginner investors, yeah, it might kill them, it might strangle them a bit. But for real investors, they just buy and forget about it. The bank will tell them, or whatever they're using will tell them that, hey dude, your stocks, your crypto is now worth $2 million, and that's when they'll decide if they want to do anything about it. Because that is essentially about investing. With investing, you're literally throwing your money away in a market and hoping for the best. You're not going to come back and look at it, because if you're coming back and looking at it, it means you're trading it. Because what happens if it's now below a certain level? Say for example, you bought crypto at $34,000, right? And then next morning you find it here. What are you gonna do? You're gonna sell, because if you hold it, obviously if you see it at this level, it's gonna stress you. So it's gonna start picking up. You're gonna be happy again, and it comes back at that level. What is gonna happen to you? You're gonna become insane. It's not good for you. it's really not good for you. So what happens is that if you're going to be an investor, you throw in your money, you write down your password, or whatever you wanna, your savings or whatever you wanna put it. You give it to someone you trust. You put it in a safe. You put the other one in your left boot. You put another one in sentimental value. One in your mother's your mother's car. The other one in your car. The other one, you just put the passwords everywhere, and you forget that it existed, right? 10 years down the line, you come back. 2030, you come back, and you're like, phew. And if it's $2 million, and if you hear on the news that Bitcoin has touched zero somehow, you're no more affected as it is when you saw it going down. You'll only be affected after the action is done, and that'll be a thing of like, oh, but if Bitcoin touches 10 million, that ecstatic feeling, because now you can just go to your mother's car and you're like, hey ma, I need to check your boot, your trunk or something. You open there, take it out of that plastic bag, you look at it and you're like, okay, password is 3355 10,059, right? And then it opens, and then you withdraw, and it hits your bank account, and you are happy, you are ecstatic. That is essentially investing. But as a trader, you're gonna always you're gonna come in here and you're gonna tell yourself, okay, I came in at 34,000. If it touches 25,000, I'm out. That's the trader's approach. I entered it at this point. If it touches this point, I'm out. Although there's some crypto that I'm buying and I'm literally forgetting about it, because it's hard to just transition between the two. So you'll always have the essence of the other in the other. So if you're an investor in Bitcoin right now, if you're an investor in something right now, it is very hard for you to become a trader, simply because you're used to forgetting your trades. You're used to forgetting your money, letting your money work for you. But if you are if you're a trader now and you're moving into investing, you become aware of certain points. Meaning a trader will not enter Bitcoin right around here. It will be dumb unless their strategy allowed them. And when it comes around here, they'll usually just approach it with a trading mindset. That's how I bought some stocks in easy equities or whatever they call them. Yes, using the trader's mindset. I was like, if it touches this level, I'm selling. I'm not gonna dangle around as it goes to hundreds and hundred thousands and millions. I'm not gonna do that. I'm literally just going in with a clear mindset, understanding what I'm doing every time, all the time, 100%. So that is simply the difference between trading and investing. First of all, it's the mindset, right? The mindset of trading and investing. Number two is the reasons I've given you. Let me just show you again. The reasons I've shown you. These reasons are, second of all, the most important reasons you need to know, right? And also, you always, in both these scenarios, you need to find a plan. You can't just enter the market all the time and hoping for the best. You need a plan. That's why I created the system, right? The system is simply to show me that this point is good for entry, 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 etc. Simply because I understand how the market is structured. I understand pip movement. I understand all these things, and to just bubble that into one thing, it's very hard, and for many traders to just move on to investing. So if you're going to be an investor as a trader, try to limit that belief system of stop losses, because you're going in wholeheartedly now. You're not trading this thing, right? You're not swinging this thing, because as traders, we have this thing, if they're gonna hold it for a couple of years or whatever the case is, we're swinging the trade instead of But another thing for investors, I'm gonna give you advice, which is in the next video, and it's gonna be a short, right? So keep watching, because it's a good one. Thank you.